Hi, this is CA Damodaram. I'm a chartered accountant, passionate for teaching. I handle account subject at all the levels of CA, CMA, CS. I run my own CA academy called My Career Point. I help students after my classes and even during classes for each chapter clarification of their doubts. Even if you attend expert coaching, while you're doing practice with the problems, you will be definitely having a lot of doubts. So those doubts, faculty should take responsibility in clarifying that. But many of the students, they feel shy and they have a lot of problems in approaching the faculty for clarifying their doubts. So many students from outside, even before the exam, they approach me, they ask doubts with me. I spend so much time in clarifying the doubts. I myself conduct consolidated doubts clarification session at all the levels of CA, CME and help the many students for clarifying the doubts and do the best in this exam. So here I decided to help many students even from outside institutions, and there are students who are doing self preparation. I decided to provide support to them. So that's the reason level wise and in account subject chapter wise I decided to record a doubts clarification session. So for that I prepared a poster. That poster is published in all the social medias mentioning clearly which chapter and for what level, and I used to give 3 days time and I collect all the doubts asked by the students. I consolidate, I check what all the common important major doubts asked by the student. Those doubts I help by clarifying that through a video, and that video I post to the YouTube. And this is my first doubts clarification session. Today I am going to deal with a chapter called non-profit organization. This applicable for CA foundation level and CMA inter level. So those students have this chapter. Those who already attended or even first time you are going to attend the chapter. So you can watch this video to clarify all the common doubts that you are going to get or you already got while you are preparing the problems. Before I clarify the doubts in non-profit organization, let me just give you an introduction about the chapter so that when you have the feel about the chapter and the concepts, you can understand clearly how I am clarifying the doubts and what type of doubts students are generally asking for. So non-profit organization, it's also just like a profit organization. This is also does lot of business activities, transactions, financial transactions, earn income and also get profit. But the only difference is the profit what it earns will not be distributed among the members, the organization who formed. So the members will not take the profit for their personal purpose, but this profit will be used for a specific purpose. There will be a specific objective for which the organization was formed. For that objective, this profit will be used. For example, you take TTD, Tirumala Tirupati Devasthanam. It is earning so much income, crores of money profits are getting every day. So this is also doing a lot of business activities, lot of income they are generating. But the entire profit will be used for the specific objective called Hinduism development. Through TTD income, they are encouraging a lot of schools, education, hospitals, and helping so many poor people for the shelter and providing free food. So there are so many specific objectives for which the organization is formed. So, but even if it is a non-profit organization, they should know at the end of the accounting year how much they received and how much they spent, what is their surplus, is there any deficit, what are the assets they are having and what are the liabilities they have. Just like a financial, just like a profit organization, non-profit organization also they want to know whether they earn profit or not and their assets and liabilities, financial position. So here even non-profit organization also they prepare a financial statements at the end of the year, but here they don't prepare in the name of trading account, profit and loss account, but they prepare in the name of receipts and payments account and income and expenditure account and as usual balance sheet. So here there are three financial statements. In profit organization we do accounting the entire year. Last year closing balance we bring as a opening balance, and throughout the year we do accounting we pass journal, we prepare ledgers, end of the year we prepare a trial balance. From the trial balance we prepare trading account, profit and loss account, and then balance sheet. But here the story is different. Here they collect all the receipts and all the payments, and then they'll prepare a receipts and payments account, which is nothing but cash book. So here they'll come to know about the cash payments and cash receipts, and also opening cash and closing cash. This will be the base for them to prepare the financial statements. From this receipts and payments account, they'll prepare income and expenditure account and then balance sheet. So while preparing these three financial statements, certain rules and regulations, accounting concepts and principles, format, and certain important special items and accounts we should understand. This is all about the chapter. Here we study something called cash basis and accrual basis, and also we study something called capital expenditure versus revenue expenditure. So these type of important basic concepts which we already studied at the 11th or 12th standard foundation level, this will be used in this chapter. So if those people who are smart in understanding the cash book and also capital expenditure versus revenue expenditure, and also the accrual basis and cash basis difference, then this chapter is nothing for you people. So receipts and payments account is nothing but just like cash book, and income and expenditure account is nothing but profit and loss account, just like in profit organization. Balance sheet is balance sheet only. Compared to the profit organization, there won't be any change. So I hope you already attended session with your own faculty or somewhere you attended, but you might have a lot of doubts while solving the problems. So I'm here to help you people to clarify those doubts. So I've already told you I've collected so many doubts. I have a few doubts which are collected through friends. So I'll read one by one doubts and then I'll clarify and I'll give you answers for that. The first doubt, does NPO earn profit? If it's so, why it is called non-profit organization? This is a very basic doubt everybody gets when someone starts this particular chapter. So here, as I mentioned already, there is no difference between profit organization and non-profit organization in terms of doing the business transactions. Both the cases, sales will be there, purchase will be there, expenses, income, purchase of assets, liability, everything will be same. But at the end of the year, what will be happen with the profit that they generate? Who will take? For what purpose they are going to use is the matters. In case of profit organization, the entire profit will be taken by the owners. In case of proprietor, single person will take. In case of partnership firm, it will be distributed among the partners. In case of company, it will be distributed by way of dividend among the shareholders. But in case of non-profit organization, it will not be given to the members. It should be used for the specific purpose for which it is formed. If an NPO is formed for a village development, then whatever donations, subscriptions, whatever collections they receive, it will be used exclusively for the development of that village. The second doubt they asked by the students, why and how to differentiate between capital and revenue, receipts and payments. First they are asking, why should we differentiate? Second, how to differentiate. Good. So many students, they have a doubt. In receipts and payments account, one side we record all the receipts, the other side we record all the payments. Why can't we take these receipts and payments directly to our income and expenditure account? Why should we differentiate? This is not something we are learning in this NPO chapter. We already learned this as a separate unit in the foundation level in a separate chapter. So there is a difference between capital and revenue expenditure. If you take a matching concept, it says that if you are spending some expenditure now, from that expenditure, if income spread across more than 1 year, then the expenditure also should spread across more than 1 year. How many years you are generating income from that expenditure? We have to match this expense with that. So this is very clear with as per the matching concept. So in case of capital expenditure, the expenditure will incur in 1 year, but you will get income more than 1 year. In order to match with the matching concept, the expenditure also will spread across many years by way of depreciation, amortization, like that we spread. So the capital expenditure we should treat as an asset and take to a balance sheet, and capital receipt we should treat as a liability. Either we show as a liability in the balance sheet or we deduct from the respective assets. Whereas the other side, revenue receipts are routine in nature, it will come and recurring in nature and related to only one accounting year. So it will be treated as a revenue and we take to a income and expenditure account as an income. On the other side, revenue payments are again recurring, routine in nature and restricted to only one particular year. That's the reason we take as an expense into the income and expenditure account. So every receipt and every payment we have to see whether it is a capital or revenue. If you wrongly treat a capital expenditure as a revenue or revenue as a capital, then it is called error of principle, where we are wrongly applying the rules and principles. Then you will not get the true financial results and financial position. That's the reason we have to differentiate revenue and capital. So in order to find the exact difference between revenue and capital, we have to see from an expenditure, from a payment, the returns, income, are you getting only for 1 year or more than 1 year? And if the payment is only for one time or it is regular recurring in nature, and for a particular payment the already asset is there, means its earning capacity is the same even after the payment or it is increasing. If earning capacity increases, if it is not recurring, only one time is paid, and from that expenditure if you are getting more than 1 year income, then it is a capital nature. If not, if the conditions are not satisfied, it is a revenue in nature. So this is how we have to classify all the receipts and payments into revenue and capital. Capital items should take to balance sheet, revenue items we should take to income and expenditure account. The third doubt, why don't we take all the payments in receipts and payments account as an expense to a income and expenditure account? So this I've already explained, but it's a different kind of question here. So let me clarify this. In receipts and payments account, I already told you receipts and payments account is nothing but a cash book. So in receipts and payments account, we record all the payments that we made in the accounting year, whether it may be relating to the current year or it may be we are making for the past years or something you made in the current year for the future. So the receipts and payments account will record all the payments relating to current year, past and future, but the payment should be made in current year. And also receipts and payments account records both the capital payments and revenue payments. But when you come to an income and expenditure account, it's purely revenue in nature and it strictly follow accrual concept, and this income and expenditure account is prepared for a particular year. So it will record all the revenue payments only, that too restricted to the current year. It will not record anything relating to the past, anything related to the future. It will record only relating to the current year. That too accrual basis we are following. So in accrual basis, whether your payment made or not is not relevant here. Whether the expense for that particular year accrued and due or not. Even if you have not made the payment, but still you have to pay the expense for the full year, the accrued and it become a due, the obligation to pay arises, even payment not made, even if it is an outstanding, but still we can record in income and expenditure accounts. That is a major difference. So we can't blindly bring all the payments as an expense. So we have to see whether it's a revenue or capital. We have to see it is related to the current year or past or future. So all those adjustments we have to do, and then we have to bring to the income and expenditure account. Same way receipts also. We can't bring all receipts. We should bring only the revenue receipts. We should bring only related to the current year, and we can bring even if it is a credit nature, even if it's outstanding, not received, provided we should check whether it is accrued and due within the accounting year or not. Fourth doubt, explain and how to account different funds in NPO. Yes, it's really a very important treatment in non-profit organization. There are different types of fund accounts. There are capital fund accounts, general fund accounts, and specific fund accounts. Capital fund account is nothing but the initial and fresh capital that contributed by the members, associates, trustees who formed the organization either for the formation or for running the organization. Whatever capital they are bringing from their own funds from outside, they are introducing as a capital that will form part of the capital fund. And the other fund called general fund. General fund is nothing but in case of profit organization, whenever you earn profit after distributing to the owners, whatever left that we keep it as retained earnings, also called general reserves, surplus, like that. So that is nothing but your general fund. So whatever surplus that we generate, that amount will keep on accumulate in general fund. That fund will be used for any purpose in the future, but it will be specifically applied for the objective for which it is formed. The third type of fund called specific fund. Here, whenever people donate amount to the organization, they can specifically tell that this amount should be used for this specific purpose. For example, if you go to TTD, people put the money into the hundis. There we don't tell anything specifically this amount should be used for this purpose. But there are some people who donates crores money and they specifically tell that this money should be used for this particular purpose. They can tell use this for buying a particular machinery, use this for constructing a particular building, or buy some furniture, or for any other specific purpose. If that is the case, that amount should not treat as a revenue receipt, should not go to income and expenditure account as a revenue donation. It should be treated as a capital receipt that should be used only for the purpose for which it is donated, and that's the reason it will go to a specific fund. For example, if you are given donation for constructing a building, that will go to a building fund. If you are given for buying a plant and machinery, it will go to a plant and machinery. Now, this fund will go to a balance sheet. From that fund, organization will utilize the money for the specific purpose it is given. When they utilize, the fund balance will decrease, and for what purpose they are using that specific asset, or if they're spending for an expense, the expense will generate. And over a period of time, the purpose once gets over, even if after the purpose over, if any surplus is there in the specific fund, then it can be transferred to general fund. It can be used for any other specific purpose or even the general purpose. This is all about the different types of funds. The next doubt, how to convert a payment or receipt from receipts and payments account to a income and expenditure account. So it means they'll give you a receipts and payments account, and then we have to prepare income and expenditure account. So each payment we have to decide whether to take to income and expenditure account or not. So how to take from here to there? So receipts and payments account is prepared purely cash basis. You record only if it is payment is done. Whereas the income and expenditure account is prepared purely on accrual basis, where we record all the expenses and income only revenue nature, and also if it is accrued and due, payment made or not is not the criteria. So now when there is a payment given in the receipts and payments account, before you decide whether that receipts, that payment can be taken to income and expenditure account, we have to first check what nature it is, whether it is a capital or revenue. If it is a capital, you don't want to think about income and expenditure account, we can directly take to a balance sheet. If it is a revenue, then only we have to think about the other adjustments, and then we have to take to income and expenditure account. For example, in payments, purchase of building, if they're given, it is a capital payment, we can directly take to balance sheet as an asset. If they're given as a rent paid, then it is a revenue nature, we have to take to our income and expenditure account as an expense. But before you take the rent as an expense to a IE account as an expense, we have to check any other adjustments are given. I already told you in receipts and payments account, whatever payment made and showed there, it is not only relating to the current year, something may be related to the past, it may be related to the future, and some rent may be accrued and due but not paid outstanding in the current year. Since it is outstanding payment not made, that would not recorded in the receipts and payments account. But when you come to IE account, even payment not made, it relating to the current year, accrued and due, so we have to record here. So what we have to do is, we have to take the total rent paid in receipts and payment account as a base. In that, if anything relating to the past we paid, that should be deducted. If anything relating to the current year, accrue and due but not paid, means that is also expense for the current year. So we have to add back anything that we paid in advance for the future. Anything you pay in advance, that is an asset, it is not an expense for the current year, so we should deduct. Like that, we have to do lot of adjustments, and then only you have to take the balancing amount, nothing but the total rent accrued and due for the current year, that should go to a IE account. Like this, every payment, every receipts we should check whether it is a capital or revenue. If revenue, you have to check all the adjustments relating to the past, current, future, and some credit items and accrued items. Those items you have to adjust, and then you have to take it forward to a income and expenditure account. The next doubt is how to prepare receipts and payments account from income and expenditure account. The other way, there are different styles of asking the questions in the exam. Sometimes they'll give you list of payments and receipts. They'll ask you to prepare only receipts and payments account. Sometimes they'll give you list of expenses and income. They'll ask you to prepare income and expenditure account. Or sometimes they'll give you receipts and payments account and then certain adjustments, whereas they ask us to prepare IE account and the balance sheet. The other way, sometimes they'll give you IE account and adjustments. They ask us to prepare the RNP account, receipts and payments account. It's very simple. What concept, rules, principles you followed from preparing RNP account to income and expenditure account, you have to prepare the same principle in a reverse way. Whereas from RNP account, when you prepare IE account, we are actually converting a cash basis into an accrual basis, so that we take only current year expense income, and we take only revenue items, and we take only accrued expenses and income. We don't bother payment made or not. We don't take past year payments, we don't take future year payments, we don't take capital nature. Whereas when they give you IE account and asking you to prepare RNP account, in IE account you already know that all the expenses, income, whatever they mention, only revenue nature. Whereas receipts and payments account, it includes revenue and capital. So we have to bring from the adjustments capital items also into receipts and payments account. Second, in IE account, they'll record only current year expenses and income, but in receipts and payments account, we record something related to the past, something related to the future, whatever you paid in the current year, that also we have to bring inside. So like this, we have to convert the accrual concept into cash concept, and in receipts and payments account, we bring purely all the receipts and payments actually received and actually paid in the current year, that may be relating to the current year, past or future. We have to bring both revenue and capital. So it's very simple. You have to keep in mind the accrual basis and cash basis, and revenue and the capital nature difference, and also you should have a very good knowledge in preparing the cash book. So these are the three important elements. If you learn well, this chapter comes under your control. Last doubt, how to make this chapter very simple. We are facing so many complications in the chapter. So what to and how to make this chapter very simple. It's a very good question. I've seen so many students struggling in this particular chapter. Close to 16 marks they used to test. So it's very important and critical chapter. We shouldn't lose. We can easily score 16 marks. When you are good in profit organization preparing the final accounts, you should also good and smart in preparing the non-profit organization financial statements. So I'll tell you one thing. In this chapter, problem will be tested based on a specific organization. Problem may be based on the educational institution, problem may be based on the hospital, problem may be based on their temple, charitable trust, religious trust, like this specific organization, sports club, like that. So what we have to do is try to get external knowledge, do something research about club, know more about the clubs. You have to first identify if it is a club, what and all receipts will be there, what and all payments will be there. Like that, if you take a sports club, there what and all will be the receipts, what and all will be the payments, what and all their income, what and all their expenses. After you get into the exam center, after receiving the question paper, if you look at, oh my god, something they're asking about the sports club, all the terms, whatever words, accounts, names they are using here, it's something new for me, I don't know the meaning, then you will be stuck there. You don't know whether it is a capital or revenue, you don't know what is the nature of that and how to treat it. So before that, try to list down all the non-profit organizations, list down their receipts, payments, income, expense, assets, liability, know something about the organization, and then go for the exam. If they ask you something relating to the about the TTD, Tirumala Tirupati Devasthanam, there are so many receipts are there, so many payments are there. If you already know all those things, then problem will be very easy. Then, keeping this in mind, three important areas where you have to be smart. One is preparing the cash book, bringing the opening balance and all the receipts, all the payments, analyzing the receipts and payments into capital revenue, all those things you should be smart. Second one is difference between capital expenditure and revenue expenditure, when to differentiate, how to differentiate, all those things you should be smart. These are all separate units you study, so apply that knowledge in this particular chapter. Next one, difference between cash basis and accrual basis, that you have to be very smart here, from converting a item, a payment or receipts from cash basis to accrual basis. You have to be smart and applying the concept and bring the answer, and you can prepare from receipts and payments account into income and expenditure account, or from IE account to RNP account. You can prepare either way if you are very good in understanding and applying the cash basis and accrual basis. So like this, I want you to make this chapter very simple. Nobody is writing the chapter just by doing a meditation. Every chapter, every word, every concept is just based on the experience. So you also get that experience. Don't simply study and mark up. Don't simply practice with the problems. If you have the concepts in your hand, if you have the steps, procedure, formula, format in your fingertips, the chapter comes under your control. Any problem from any author, any source, any book, it will be very easy for you. So I will share the notes for this particular chapter. Anybody is really interested, wants to get the chapter notes or even the full chapter explanation, you can contact me, you can find my details. Thanks a lot. Like this, I am going to release a poster for each chapter at all the levels of CA, CMA, and I'll give 2-3 days for asking your doubts. So those people really wants to clarify your doubts, you hit your doubts to me. I'll record a video like this and I'll keep posting. Thank you.